thanks so much. There are houses cheaper than cars, and we are not joking about this. In Detroit, at least 16 homes sold for under $30,000 last week, with a 4-bedroom home selling for only $7,000. Can you believe this? The city's housing market has been one of the hardest hit, with the number of U.S. home loans entering foreclosure at an all-time high. Let's get some of these frightening details now from John Bendall, the owner of the Remax Classic Group. Hello to you, John.
Hi.
So welcome back. Houses cheaper than cars in Detroit? How is this possible?
Well, I'll tell you, for one thing, if you're an investor, that's a really good place to go. When it comes to supply and demand, and you know, with the economy the way it is in Detroit, right now the demand is low. So there's opportunity there for investors, true investors, who will go in and look for return on their investment and not just buying for speculation.
Right, but they'll sit on it for a while and then they'll be able to sell it. All right, but you know, this is Detroit we're talking about. Is it the situation that's unique to Detroit? Or do you think we can see it happening in other parts of the country? And I guess we should say that it's because the auto industry is in trouble there, and so there have been layoffs, and that's really what's contributing to this demise in Detroit.
Over the years, I've seen different pockets depending on what the local economy is doing. I'll give you a perfect example. 5 years ago in Philadelphia, there was sections of Philadelphia where we could buy row houses for as low as $40,000 that turned around positive cash flow. Now today, those row houses are up about $70,000, so there was a great investment opportunity at that time.
Yeah. What about, we said foreclosures. I mean, is Detroit just the tip of the foreclosure iceberg here across the country?
It's too early to tell. I mean, you know, you had a lot in the last week or so. We were talking a lot about the subprime market and some of the opportunities there. But you got Indianapolis, is another one. Indianapolis has a lot of foreclosures. I think they lead the nation as of today in foreclosures based on overbuilding. So in different pockets, in different markets, you can see it starting to spread out. So
homeowners, I mean, is there anything people can do to protect the value of their homes?
To protect the value of their homes?
Yeah.
Well, you know, I think that, again, going back to supply and demand, I think that, you know, the economy and the Fed, by the way, this week, keeping the interest rate, you know, for the most part where it was and not raising it was a great thing. I think the economy itself is the thing that drives it. You're always going to be, once you buy a house, when you buy into a market, if the market goes up or down, it's okay, because if you're going to move, wherever you're going to move, as long as it's locally, that market's up and down too. So you're going to be making a cross. So once you're in the market itself, you're pretty well safe.
John, I'm curious, you know, predict here how low you think prices could go in this region and others that are hurting right now, and how long do you expect this slide to last?
I personally think that we bottomed out somewhere around October, at least in this region. We've seen it, you know, February was a great month as far as for closings across the United States. I think that, you know, I don't see the market going up. I see it kind of flatlining around here. But what we're finding is we've actually seen multiple offers, because if the house is priced right and it's in great condition, the buyers are coming out and buying. Yeah,
that's what I'm hearing actually anecdotally myself. Okay, John Bendall, thanks so much. We'll talk to you later this morning.
Thank you.